All right, guys, Mitch Vexler is back with mockingbirdproperties.com. And then there's an extension after that if you want to get to all his research. We're going to put it up on the lower third. He's back because we got a great response to his being with us. But I also was watching some of the clips from a movie I had never seen called The Big Short. I had never seen it. And I guess it came out in 2015 about the housing crisis of 2007, 2008, and the collapse of like Lehman Brothers and other things. And wow, it's very scary because I think we're setting up for that again, but this time much worse. And yet at that time, I think it was like 6 million people lost their homes, not to mention all the jobs that were lost. He joins us again tonight before I go to some very shocking clips and shocking information because the guy behind that, he is now shorting NVIDIA and I think Palantir and other things, claiming we're in a huge AI bubble. Are we about to see the destruction of your 401k? Are we about to see the devaluation of your retirement account? Joining me now is Mitch Vexler. Mitch, welcome back to the broadcast. Thanks for being with us.
Well, thank you for inviting me back.
I want to go to this trailer of The Big Short. And I want you to look at this trailer and then maybe talk a little bit how much the problem is from then to now, because it's much, much, much bigger, obviously. And then we'll talk about the guy that was behind it, one of the guys in this film who's now shorting some of the AI stocks. And I got some screenshots to show on that. But first, here is the trailer from The Big Short, and we'll have Mitch respond to that. Here we go.
Michael, how are you?
I found something really interesting.
The whole housing market is propped up on these bad loans. They will fail.
The housing market is rock solid.
It's a time bomb.
So Mike Burry, who gets his hair cut at Supercuts and doesn't wear shoes, knows more than Alan Greenspan.
Dr. Mike Burry, yes he does.
You know what? I'm off. American people are getting the big banks.
And I am getting madder and madder.
It's unbelievable.
Then this guy walks into my office and says,
there's some shady stuff going down. All the banks were having a big old party. A few outsiders saw what no one else could. The whole world economy might collapse.
I'm sure the world's banks have more incentives than greed.
you're wrong.
No one's paying attention.
The banks got greedy, and we can profit off of their stupidity.
You want to bet against the banks?
I think we're either high or having a stroke. Kind of brilliant.
Fraud has never ever worked. Eventually, things go south. One day, we forget all that.
How can the banks let this happen?
It's fueled by stupidity.
But that's not stupidity, that's fraud.
Tell me the difference between stupid and illegal, and I'll have my wife's brother arrested.
You have any idea what you just did? You just bet against the American economy.
If you're wrong, you can lose it all. The banks defrauded the American people. Now we can kick them in the teeth.
Okay, here we go.
You target strippers
With bad loans.
No cash rich.
not going to be able to refinance.
On all my loans?
What do you mean all your loans?
I have 5 houses and a condo.
All right. So how much worse is it now than it was then in that portrayed in that movie, which was based on real life?
Well, look at it this way. Those particular investors went out and bought, those people who were shorting the market, they bought what's called credit default swaps against those who were long the market. Those who were long lost. This time, the credit default swaps probably won't pay off. And the reason they won't pay off is that the fraud that has occurred, both created by the school districts and allowed to fester. So the school districts own the central appraisal districts. That's how it is. They own the central appraisal districts. The problem is, if you go out and you
the
buy...
audience understands that. Your school district creates the central appraisal district that appraises your home at the value they need it to be to tax you at the rate they need to have you taxed to give the money to the school district that the school district's asking. So again, understand, the school district creates the central appraisal district that gives the school district the number and the money and the valuation they want to get the money they want. So in that way, it is rigged, right?
No, it's fraud.
Yeah, fraud.
I mean, it's just straight up fraud. So when you realize and you start connecting the dots, well, who's involved in this? You have bond underwriters. You have credit rating agencies. Now, remember that word from 2007? How many of them, the rating agencies, got it wrong? Well, they're wrong now. I wrote a document about 3 weeks ago. It's on my website, using the math from the credit rating agencies themselves to prove that these bonds that are out there are in truth sub-junk. It's worse than junk bonds. This can't be paid off.
Okay, let me stop right there. Wasn't that one of the things we found out in 2008, as you mentioned, that the credit ratings, they were giving ratings and they knew these were not good ratings, but wasn't the line basically, if we don't give them what they'll want, they're going to go down the street to our competitor?
Yes. And that is where you are right now today. This is deja vu all over again, except the magnitude of this is so much larger and so much more dangerous. The credit default swaps, like if you could get them today, and I'm not even sure you could, but if you could, they won't pay off. They shouldn't pay off. And that's part of the derivatives. Now you're going to say, well, why shouldn't they pay off? Because it's fraud. What you had before had never touched the world in 2007, where you get into a loan with no income verification. First time the world had ever seen that. Well, what you're now looking at, you're staring down the barrel of a 4-barreled shotgun, and every barrel is enough to knock you out. That's the problem here. You've got so many elements inside of these. Even if you could get the credit default swaps, they're going to say, well, we're not going to pay off because the system itself has caused the fraud. Well, then you turn around and say, who's the system? Who set this up? Well, clearly the central appraisal districts, which are owned by the school districts, is problem one. But problem two, the states' governments themselves, i.e. the state comptroller, the executive branch of these states, they're in this up to their eyeballs. They've been notified with formal criminal complaints against the people at the central appraisal districts who are caught on video. All this evidence is on my website. There's no way out of the evidence. Even the courts have admitted fraud has occurred. What they do is they don't want to talk about it. So they say, yeah, fraud has occurred, but you can't go any further past the appraisal review board. That's the final determiner of value. Yet the appraisal review board under law has no capacity to determine fraud. So to your point of the system being rigged, yeah. But what is a credit default swap? It's an insurance policy. When fraud enters the equation, the insurance policy 9 times out of 10 doesn't pay.
Right, because fraud cancels everything, invalidates everything. Yeah. Okay, so President Trump said this in his interview with Laura Ingraham last night. Here we go.
But even with interest rates up, the economy is the strongest it's ever been. You know, you asked me, just to go back to the beginning of your question, you talked about prices. We're down on energy. We're down on interest rate. You know, interest rates are down despite the Fed. Now, if we had a normal person at the Fed, would have really low interest rates, and we will soon have that. We'll have somebody that's...
And why are people saying they're anxious about the economy? Why are they saying that?
I don't know that they are saying. I think polls are fake. We have the greatest economy we've ever had. We will have over $20 trillion come into our economy, and it's largely because of my election, but it's also largely because of tariffs.
Yet today, Logan, can you find it? Yet today he put out a True Social post that if the Supreme Court goes against me on tariffs, we're going to have to pay back $3 trillion. What? Where'd that number come from? And I mean, you have that, you have it, Logan? Because it's so shocking that the President of the United States would put that out. I thought it would rattle the markets more than it did today. But maybe people have gotten used to him saying things like, hey, it's the greatest economy ever. Energy is down. Did I just hear him say energy is down? No, all of our utility bills are up. What's he talking about? Here it is. The U.S. Supreme Court was given the wrong numbers. The unwind in the event of a negative decision on tariffs would be including investments to be made and return of funds in excess of $3 trillion. It would not be possible to ever make up for that kind of drubbing. That would truly become an insurmountable national security event and devastating to the future of our country, possibly non-sustainable, end quote. Have you ever seen a president put out a statement like that? I'm a little shocked that the markets don't seem to be too rattled by that today, but maybe they've grown immune to some of the comments that he makes. Let me just take a look at gold real quick today. Gold is hovering around $4,130. Silver's at $51.30. What do you make of this? The economy's great, better than ever. And yet, the tweet today, the economy might collapse and it might be a major national security event. All within less than 24 hours of each other, the two?
Yeah. So what are we really dealing with here? Well, we're dealing with issues that are inconvenient for the government. I saw that clip on Laura Ingraham early this morning, and truthfully, he blew it. One must understand, and he punted on the question. I mean, he just didn't answer it. Laura Ingraham was right to ask the question, what is happening with the economy because people are suffering? And instead of answering the question the appropriate way, he just didn't answer it, and that's a problem. The economy can be bifurcated into different pieces. You can say that mom and pop is an economic element. Oil, be it energy costs, is an economic element. The stock market itself is an economic element. And all three of these elements can operate independent. They're non-correlated against each other. They can do that. They can also operate correlated. Well, to say that the polls are fake and what people are feeling and what people are suffering from economically denotes that that isn't real. And that's just dead nuts wrong. All you have to do is look at the government statistics itself and figure out how many foreclosures are occurring. Foreclosures are ramping up. How many evictions are occurring? I did this math just a couple of days ago, and there's margin of error in here, but give or take, with the evictions, you're going to end up in 8 million evictions within the next 24 months. Okay? So you can't say
I'm going to write that down, by the way. I'm going to write this down. 8 million evictions. And I'm going to write this down, and we're going to discuss it when it happens. Logan, you should tag this and put a note in your journal. 8 million evictions in the next 24 months, because we're going to come back to it. Because, you're saying what's going to happen. Kind of like these guys on this Big Short movie where they knew what was going to happen. You know what's going to happen. 8 million evictions. And by the way, I don't know if there's a line in the movie where Brad Pitt says, with every 1% of unemployment, that equals 40,000 deaths. I think I heard that line. And I'm guessing that's because people commit suicide?
No, it's because they can't afford a roof over their head. We figured out about a year and a half ago that 37.8% of the household population is in harm's way of bankruptcy and or losing the roof over their head.
Okay, so when he said death, he was meaning financial death.
Yes.
Okay.
Yeah.
So,
but that means they're evicted, right? You can't lose. If you're in an apartment, you get evicted. If you're in a house, you get foreclosed. But forget the percentage for a second. Put a hard number behind it. It's 42 million households across the United States. And isn't it interesting that the eviction notice, there was one called Clayton, Georgia. I saw it the other day. Lo and behold, 36%. That's within striking distance of my 38.7%.
Yes, it sure is.
Right? And we have multiples all above 30%. That's happening now. So I want to come back to one other point you raised on President Trump when he says, well, we've got $20 trillion of income coming in as a result of the tariffs. Okay, fine. Except that he made a mistake, which was he should have explained how is that going to benefit mom and pop. So it's okay. In other words, he's doing what a developer should be doing, right? Which is, I've got a problem. I must increase top line revenue. It's clear as a bell. So he's increasing the top line revenue through the tariffs. Perfectly fine. The problem is we can't seem to get anybody to be paying attention to mom and pop over here. Here's the tariffs over here. Here's mom and pop. You've got to take these two sides and start squeezing and pushing towards the middle to fix these problems.
Because the tariff money right now is going to who? Who's getting it? The government? And then the government doesn't give it to the people or lower their taxes over it, right? As we were told, hey, we might do it with the IRS. That's what we were told when we were campaigning.
In theory, it would go to reduce the U.S. national debt. But you run into so many problems. The U.S. national debt is about $38 trillion, give or take. The deficit this year, or at the moment, I believe, is $1.9 trillion, which means they're short. Now, job one is try to balance that issue. However, you still have, give or take, $127 trillion worth of unfunded liabilities. And the problem with, be it a state government or a federal government, they don't want to admit mistakes. But as I keep saying, the math is so much bigger than the federal or state government. You're not going to have any choice in the matter. We're going to wake up one morning, the NASDAQ's going to be down 2,000 points, and everybody's going to be freaking out.
Yep.
Worse than what happened in 2007. But the evidence is in front of us. It exists now. So the idea that, well, we're the government, we're here to help you. No, you're not, because if you were, you'd be doing it.
Well, in fact, the Trump solution is a 50-year mortgage, which again, he seems to think there's a 40-year mortgage already. I've never heard of a 40-year mortgage. Is there a 40-year mortgage right now?
There is. It's done through HUD on the 221D4 program, but even that is a bunch of nonsense.
Okay. I didn't know there was a 40-year mortgage. He does because he mentioned it. So Laura Ingraham pushed back against it. 50 years
complete garbage.
All right. Well, here he is. Here he is talking about it.
To the question, though, because your housing director has proposed something that has enraged your MAGA friends, which is this 50-year mortgage idea. So a significant MAGA backlash, calling it a giveaway to the banks and simply prolonging the time it would take for Americans to own a home outright. Is that really a good idea?
It's not even a big deal. I mean, you know, you go from 40 to 50 years, and what it means is you pay something less from 30, that some people had a 40 and then now they have a 50. All it means is you pay less per month. You pay it over a longer period of time. It's not like a big factor. It might help a little bit. But the problem was that Biden did this. He increased the interest rates. And I have a lousy Fed person who's going to be gone in a few months, fortunately. I have a guy too late. You know, Jerome Powell, we call him too late. He was too late in everything, except when it came to before the, you know, the so-called Democrat election, which didn't work. But we're going to get interest rates down. But even with interest rates up, the economy is the strongest it's ever been. You know, you asked me, just to go back to the beginning of your question, you talked about prices. We're down on energy. We're down on interest rate. You know, interest rates are down despite.
We're down on energy. That one is so wrong, particularly with all these AI data centers. I want you to comment on the idea of the 50-year mortgage. But before I do, look at this. My friend Mark Mitchell, the lead pollster at Rasmussen, put this out. The night of the fan mail, young man says, quote, I'll join the club here, completely done with MAGA and Trump. The federal government could freeze assets of illegals tomorrow and self-deportations would go through the roof. Confiscate houses, cars, accounts, etc. ICE would need a fraction of the people if you did that. There is so much low-hanging fruit. Cancel H-1B. Stop with the 100,000 complex fee nonsense. Arrest a CEO or two for keeping their DEI department active and charge them with discrimination. All of this could be done within a week and would completely change course. I'm 28 years old, and all my conservative friends are done with Trump as well. Nobody's lives are any better. A complete unforced error. He almost died, and God saved him to give us 50-year mortgages. Where is Trump? Because this isn't him. Lots of young people having this reaction. They were very hopeful. Many of them were behind Trump when Elon was on board with Doge because they thought, hey, they're going to cut this bureaucracy. They're going to get rid of inflation. They're going to bring the interest rates down. They're going to get control of government and tax rates. And we're going to have the American dream back, and I can actually have a future. And now they're realizing, no, that's not happening. Here's your 50-year mortgage. Go be enslaved. What do you make of all this?
Bill Pulte who is Pulte Holmes,
Right.
I believe his grandson, owes President Trump an apology. The White House should never have let President Trump put this issue into the public without this being thought through. The 50-year mortgage is utter nonsense, and here's why. It increases the total interest that you have to pay. It virtually doubles the value of the house that you're paying. The average homeowner here in Texas is 47 years of age. What's 47 and 50? 97. What are the odds of paying off the house? 0. Now, if you're a new home buyer and you're 30 years of age and you add a 50-year mortgage, what are the odds of paying off the house? 0. If you go to sell that house in 15 years, what's your equity buildup? 0. You seeing the picture here?
Mm-hmm. Does this fit the World Economic Forum? By 2030, you'll own nothing and be happy?
Well, congratulations. You now have the War of 1776. Mm-hmm. You have a civil war on your hands. You cannot steal money from people and say you get nothing and everything you're working for is for the benefit of the government. That is a violation of the U.S. Constitution and what all members of the military have fought for since the inception of the United States of America. Not acceptable.
Isn't that interesting? Because I had no idea you were going to say that, and you had no idea that I had this clip queued up ready to go. Because two people are on the same wavelength, Elon Musk and Mitch Wexler.
You get taxed on what you own, you get taxed on what you buy, and you get taxed on what you own. And it's like, okay, this is, you know, taxes, 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 and you know, and then what does it get spent on? A bunch of the stuff it gets spent on you don't even agree with. So you know that's why we need to reduce the size of government and just spend less money and you know, let the people keep a lot more of their hard-earned money. You know, it's yeah. So.
And of course, if it's not taxes, 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 it's interest, 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 right?
The theory being that, okay, the banks are behind this. This is good for the banks. Yeah, no, it's not, because your probability of default on a 50-year mortgage is exponentially higher than it is on a 30-year mortgage. Your probability of collecting the interest outstanding on something that A, will be foreclosed on, B, people can't afford the rent. Either way, you've got evictions and you've got foreclosures. Your probability of success at a bank is actually less, because if you lose a house via foreclosure, as compared to the interest coming in, you, the bank, lose. This is a lose, lose, lose proposition. The banks won't make any money with it. It's complete nonsense. Somebody will tell you that they will, but they won't. The net result will be multiple foreclosures. And who's going to come in behind those people that lost the house and say, I'm going to repeat that same thing. Please give me that 50-year mortgage so I don't have any more money in my pocket. Mm. This is utter nonsense.
Are we headed toward being
owes an apology to President Trump?
Are we headed toward being a nation of renters?
No, you're not going to be able to afford a damn thing. This system is going to blow.
So you
either start admitting the fraud, or the system will break.
And I know you say it's happening now, right? I mean, all the signs are it's happening now. Does Trump get out of his presidency, or does this all collapse on his watch?
This system can be saved. That's what's so frustrating out of all of this.
Nobody's doing it. They're not listening. They're not doing what you're suggesting. You laid it out with us with like an hour and a half a couple weeks ago. So I don't think they're going to fix it. I almost think they want it to collapse, and they can roll in digital IDs and get everybody where they want. You know, the old statement by the globalist James McGregor Burns in his book, 84, The Power to Lead. We can't get the American people to go where we want them to go unless we have a stupendous economic and financial crisis.
And if the politicians are pushing the system to the point that it breaks, that's with knowledge. That's with intent.
So you think they're going to intentionally collapse it on Trump? Because I think they are.
One would hope not. But the reality is that every day that goes by, see, you've got a compound cumulative interest problem here. Now, never mind the fraud, but your compound cumulative interest is growing by the nanosecond. Do you know that in the case of Denton Central Appraisal District, just as an example, our math shows that they're running a $20 million a month deficit. Now, we also figured out that if the property values drop by 20%. The deficit turns into just short of $1 billion a year.
And where is that? So, is that nationwide or just in Texas?
No, that's just in Denton. That's just in Denton County.
Whoa.
But you see,
one county.
Right. So one county. So that problem replicates itself, i.e. California, all the way throughout Texas. It doesn't matter where. It's the compound cumulative interest. And the only thing I can say to the politicians, it's the debt, stupid.
Wow.
This is the problem.
Well, maybe that's why they want the collapse. Hasn't Donald Trump in a past Truth Social hinted at the idea of just a default? We'll just wipe the books clean. Maybe they want a whole collapse and start over.
The problem is, now the United States has defaulted 6 times in its history, but the magnitude of a default of this caliber, which is so blatant that they screwed up, they allowed the fraud to fester. The courts allowed the fraud to fester knowingly. Well, if you're knowingly allowing this problem, what credibility could you possibly have in the future? And by the way, going into Bitcoin and saying we, the US government, are going to take a position in Bitcoin is the exact opposite of what Bitcoin was created to do, which is called decentralization. You don't want any government, including the French government, to have any portion of any of these type of cryptocurrencies. So the fact that the government's getting involved, I think that's going to save their neck. Not a chance. If they're going to default the system by intent, the bond market isn't going to be worth a damn on anything.
Look at this. This financial report that I follow. The median value of U.S. consumer stock market investment has surpassed $300,000 for the first time in history. Investments include single stocks, mutual funds, and retirement accounts such as 401ks and IRAs. This gentleman here, however you say his name, said, hey, this is the trap. America just walked into history's largest wealth illusion. The median U.S. household now holds $300,000 in stock for the first time ever. Tripled since April 2020, up $100,000 since March alone. Equities now represent 52% of all household financial assets, higher than 2000.com peak that destroyed millions. This is not wealth. This is a coordinated illusion at civilization scale. Every grocery store clerk, teacher, and Uber driver is now on a margin call away from ruin. The entire middle class has now been converted into involuntary speculators. Their retirements, their children's future, their survival, all tethered to the same overvalued assets. The mathematics are terminal. When participation reaches maximum, buyers vanish. When allocation peaks, reversions begin. When everyone owns the same thing, liquidation becomes a synchronized chaos. 2029 taught us. 2000 reminded us. 2008 confirmed it. 2022 whispered it. 2025 will scream it. Valuations are historically extreme. Sentiment is dangerously euphoric. Concentration is catastrophically high. Margin debt remains elevated. Corporate buybacks, artificially inflated prices. We'll get to that in a minute. Massive flows blindly chase indexes. Liquidity is phantom deep. The crowd believes this time is different. The crowd is always wrong at peaks. Real wages stagnated while asset prices exploded. Productivity flatlined while portfolios ballooned. The wealth is paper. The debt is real. The consequences are inevitable. What's next is not a correction. It's a reckoning. Those holding cash will inherit the future. Those holding conviction in overvalued narratives will learn what 50% drawdowns feel like in retirement accounts. That means 50% of your retirement account gone. This is complete. This setup is complete. The players are positioned. The trap is set. History will mark this moment, not as prosperity's peak, but as the hour before the largest wealth transfer in modern history began. The question is no longer if, only when. Welcome to the golden age, Mitch.
Yeah, so I agree with everything that was just stated there, but it's worse. And the reason why it's worse is because
we need to have shirts printed, by the way, but it's worse, Mitch Vexler.
Yeah.
Because it always is, isn't it, Mitch?
Recognize who the bondholders are. See, most people don't understand that their money is in the bonds. When you have a 401k and you have a pension, and if you don't know where that money is specifically, you've got a problem. But a lot of this money is in the bonds. Well, what's backing the bonds? They would say mortgage-backed securities. We have houses, we have mortgages, we have this, we have that. Interesting. All real estate is local, local, local. So let's break this down for a second. You have a property value, according to the Central Appraisal District, rise of 100% in 5 years, where there is no math on this planet, there is no law on this planet that can back that valuation up. That is pure fraud created by the Central Appraisal Districts on behalf of their owners, the school districts. Okay. Do you realize that in order to get back to a value just 5 years ago, your house value would have to go down by 50%? Now, ask yourself this. What are the value of the bonds outstanding today that are gathering compound cumulative interest, knowing full well that those bonds are going to get an automatic 50% haircut at a minimum? But it's worse, because the way that the compound cumulative interest works and the way that the market works, when you take a haircut like that, the pendulum swings so far to the left. What's the real value in order to pay those bonds off at any portion? Our math shows it's about 13 cents on the dollar. You see the problem? The compound cumulative interest of the outstanding interest on the fraudulent bonds cannot mathematically be paid off because there is no money at the median household income level to pay for this, but for hitting a target of value, give or take, around 13 cents on the dollar. And then it also is interesting to point out with regard to the defaults, well, when the federal government via the U.S. Treasury prints money, do you understand that's a default?
Right.
Printing money is counterfeiting, especially when it's not backed by an asset. We're just going to print it, and that creates inflation. Inflation is a hidden tax.
Yes.
And either way you look at this, it's the same thing at the federal government. The federal, through the U.S. Treasury, prints money. That's a fraud. What happens at the state level? Well, we're going to print money for the school districts because, as you said, it's for the children. Well, it's not. It's not going to the children. It's going to cover off pension funds, and it's going to cover off fraudulent bonds, both in terms of the outstanding fraudulent bond plus the outstanding interest on the fraudulent bond. The point of the matter is this is a state issue that's being duplicated at a federal level.
So
either way, this isn't going to end well.
What pops the balloon? I mean, here, take a look at this. This person put out there, the famous Big Short Michael Burry is back. He's the one that the movie's about, one of the guys that saw what was going to happen in the 2007, 2008 crash. He's heavily shorting NVIDIA and Palantir, the two best performing stocks of this decade. Will he be right again like in 2008, or is it different this time? I think here's another one. Supposedly, I don't know, is this true? He spent $1.1 billion on NVIDIA and Palantir puts. That's 80% of his entire portfolio. He's betting that the AI bubble will burst soon. Have you heard this? Is that true? Is he really doing that big?
It could be. I mean, he can swing that. I mean, he can use margin. He can do all sorts of things. But I want to point something out. The market is the stock market. This is not mom and pop. Again, people have got to fix their terminology. There are elements inside of the markets. The stock market is just coming off of an all-time high, and it had a pretty big down day. But when that announcement first came out on Michael Burry, 2 days prior to that announcement with Travis, I literally said that I believe this market is way overextended. It's due for a pullback, and here's where it's going to go. It's going to hit this first level of support, then it's going to hit a second level of support, and it's going to do it fairly quickly. About 10 days before is when the 13F with Michael Burry came out, and it appeared that he was shorting NVIDIA. Well, NVIDIA and Palantir are components of the NASDAQ, and lo and behold, what happened? Well, market came down 10%, real hard, real fast. Isn't it interesting? It was literally on the heels of Burry's announcement. So he's looking at it, and by the way, so he can do this with options, but do you realize he can also trade futures? So if he did one of two things, let's go back 11 days ago, and he said, fine, I'm going to buy puts straight out, naked puts. Okay, that's options. Then he could simply say, I'm going to take $100 million and I'm going to go short the futures. So he has made a hellacious rate of return in about 10 days. And that type of money, because he knows what he's doing, he can trade it. Mom and pop are not Michael Burry. And when these people say, well, he's doing this and he's doing that, they haven't got a clue what he's really doing. That's what you see on the surface. You can't see what he's doing with the futures. So the point of the matter is he can trade it. How does mom and pop take advantage of this? Well, one of the biggest investors and the best investors on the planet is saying, I don't believe that AI is going to continue. And you look at the all-time high of the market, independent of looking at your neighbor and seeing the condition of your neighbor. How many people in your neighborhood are being foreclosed on or being evicted? So you have two bifurcated markets, independent markets, flashing red signals. So the only question is, can mom and pop protect themselves, and what can mom and pop do in order to understand what's happening? A, get educated about these issues, but B, protect yourself. Don't be jumping into markets you don't understand and can't control. And if you want to learn how to trade, that's great. But there's all these things you must do. Get involved with your school district. Start pushing the panic button with your chief appraisers and with regard to your school districts, your school superintendents, and saying, answer these questions. How much in fraudulent outstanding bond debt did you idiots run up? How much in interest did you run up? And if you don't like the answer, go and press charges against them, criminal charges. Get a handful of people together and sue the crap out of them. There are things you can do, but sitting still at this point isn't an option.
Are you going to release how the citizens, the viewers, can be involved in class action lawsuits? Or I thought that you were going to do that, right?
We're working very hard to get that model. It's a little more complicated, but we're trying very hard to get that model to work where we can help the attorneys across the United States format the class actions, and we can deliver hundreds of people per attorney to kick this into gear. We have the evidence on our website as to what it is in Denton County, but we've got evidence from across the United States, including from California themselves. So if we can figure out how to model it to get it to work smoothly, then we're going to do it. And yeah, we're working on that.
Good.
And the attorney in Washington is even working on a document to get it into the hands of the Supreme Courts through the justices across the United States.
What do you make of this? Warren Buffett's Berkshire quietly moved $6 billion off the table. That came out around the 7th of November.
Well, he's been going to cash for a long time. He's looking to shoot an elephant, basically. He's looking for some company that he can acquire cheaply. But he recognizes what the problem is. I mean, if you think about it, not that I'm Warren Buffett in scale or size or anything, but I can't build knowing what I know in this market. Because if I go to my investors and I say, yeah, let's go ahead and build multifamily at $305,000 a door for what it used to cost me, $185,000 a door at $305, that's the equivalent of $3,000 a month. I'm building into 70% credit risk.
Right.
So I took my cookies off the table. Well, what's Warren Buffett done? He took his cookies off the table.
So you're both waiting on the same thing, which is a massive correction.
There's no alternative. What are you going to do? You can't play in this market. This is suicide.
Do you feel your money is safe in the bank, sitting on the sideline?
Who said I've got money in the bank? Right?
Are you worried about a bail-in this time instead of a bailout?
Horribly, because the government allowed that to happen.
What does that
After
look like
Greece,
for the
that
average person?
became deja vu.
Thank you.
I believe
After
that law
Greece.
was passed. Yeah, 18 months ago, the U.S. government passed a law that said the banks can take your money and do a bail-in. You know, obviously, we have enough emergency cash on hand to sustain us for several months. I've got staff to pay, et cetera. But having cash reserves in a bank is nuts. Now, Warren Buffett, he's got treasuries, he's got all sorts of stuff. Because of his size, they won't jack him around. But a small guy like me, they can jack us around. They can take the money. Now, what are you going to do? Oh, we're going to hand you back shares in our defunct bank? No, thank you. I'll pass.
So bail-ins, what does that look like for the average person watching tonight?
If you don't have 3 months or 4 months of emergency cash, and I mean cash, outside of the bank, go bury it in your backyard as far as I'm concerned. You're wrong. Everybody should have some money in their pocket in case of an emergency. What are you going to do if these bank runs start up? You think Jerome Powell's going to be able to stop that? Not a chance. You get another bank that goes down like the bank in California, you're not going to be able to stop that. That'll be a full-blown panic. Why would you put yourself in harm's way? Just be smart about these things. Realize that the government has blown this so badly with regard to the inflation and what they're causing people to have to pay. We did a short segment earlier this morning on hamburgers. So a guy comes out, this is on the McDonald's issue. So do you realize several years ago, the guy was a kid, so let's call it 15 years ago, he was able to buy a hamburger at $1.50. You know what it is right now today? 12. Did the median household income go up pari passu with that? Not a chance, not even close.
So you're saying if you go to the average hamburger joint and order a meal, it's $12?
No, order a hamburger. It's $12, right? Wendy's is having problems right now. Wendy's is downsizing. McDonald's came out yesterday saying we've got problems with our guests. They're not able to pay. We're having to boost the I think they call it a Happy Meal, right? So they're having to boost the cost of a Happy Meal. These things are ramifications of the inflation. Look at it this way. Mom and pop, a house, is just like a business. It has operating expenses. If the income isn't there to cover those operating expenses, that's no different than certain Wendy's having to close down because they don't have the income in those particular restaurants to carry those operating expenses. What's the definition of that? Liabilities greater than assets, bankruptcy. That's the definition. So these corporations are being hit and smacked around just as hard as mom and pop. The difference is that mom and pop don't have other restaurants to help offset the damages. They only have the household. And when you strip their ability and lower their median household income, you're culpable in creating the fraud that took them down.
And so how does this end? How do you see this? I mean, what are you expecting to wake up to one day? The news that the markets crash, that is it going to be some major bank that collapses due to derivatives and all this bad junk? What do you think is it that tips it over? What is the starting of this implosion that then is off to the races and starts being something that's got contagion on it and spreads across the country and the world? What is the event?
There are geopolitical problems. There are state problems. There are federal problems. There are so many canaries in the coal mine gasping for air. I don't know which one is going to die first, but I guarantee you they're going to die. That's just the way the math is. You can't get around this math.
And what time frame are you thinking? In the next 12 months?
Started.
It's already started. So are we going to see this in 20? I told my team that I've been quietly cutting costs left and right for the last 12 months. Cutting costs everywhere we can, constantly, left and right, looking for everywhere we can cut cost to cut. And so far, we've cut several $1,000s out of our budget. Now, we had to spend some money to up the technology so that we're not paying a huge company for the technology that we can eventually do ourselves much cheaper, but we had to invest the money to build the server racks and the servers and everything we need to have done to keep the network going. So I had to put some, got to spend money sometimes to save money. So we spent some money over the last year, but it ends up saving several thousand. And then we, as I said, went through all of our budgets the last 12 months and cut several $1,000s a month out of our budgets as a network so that we can stay afloat when others go under. We're also debt-free, thankfully. But we have to keep that cash flow going, even though we're debt-free. Thankfully, we don't have any debt to service. But we've got to keep the cash flow going to keep the network afloat. But we are cutting our costs and have, as I said, for the last year, drastically. Now, the issue is, at what point do you think the average person in their business and their home can't do that? And so how does this end? Is this something, because I'm telling my group, I think 2026 is going to be a tough year. I don't know. It's just in my gut. And I just told him again last night in a meeting, 2020 and our IT guy this morning, 2026, I think is going to be a tough year financially. Agree or disagree?
Yes, and it's happening as we speak. So I have a friend who is a world-renowned chef. They have 2,800 employees. And what's going to happen if the healthcare cost for those employees goes up 4 times? He's going to lose employees because at that point, why are they working? They don't have any money in their pocket. There's no reason to work. They can't afford the healthcare. Now what? So even on that level, that's another canary in the coal mine just sitting there. There's no answer for it as we sit here and speak right now. I mean, the governments are chit-chatting, but nobody knows what that solution is going to be. Well, that's a lot of employees. Then you look at the inflation in the market. Those restaurants used to generate about 28% EBITDA. Not that I'm a believer in EBITDA, but that's just go with it for a second. Right now, today, they're hovering around 9. If they didn't own the real estate, they'd already be done. The fact that they own the real estate, no debt, is what has been able to sustain them. That's 2,800 employees sitting there. They're dancing on a razor blade. In my own building, so I've got restaurants in my own building, I'm very concerned about that. So just like you, I've been cutting costs really for the last 18 months. Easy. Cut costs, cut costs. The one place I didn't cut the costs, the building needed some repairs. It's always minor because these are Class A, it's Class A building. But nonetheless, it had to be done because I have to do what I have to do to keep my tenants in place. Otherwise, I've got vacancy. I can't have vacancy. That's not acceptable. And this is a very nice area that building happens to be in. But just like you, I have to cut the costs because I have to ensure that those tenants stay there. It's not an option. You spend the money where you have to spend it, but all these other people that are levered, think of that. Think of how bad it is in a house. You're levered up. You bought a house in the last 24 months that in truth is worth 50 cents on the dollar less than you paid for it. Just to get back to the value where it was 5 years ago. You bought into a fraudulently induced market. You are going to get hurt. That's the problem.
Look at this. Now, I think this is true, right? NVIDIA is paying to buy its own chips. $7 trillion in fake demand could trigger U.S. recession. Here's how to protect your family. Do you know anything about that story? Is that true?
Yes. So what you have is a very incestuous relationship between NVIDIA and Planeteer and Oracle. And I saw a graph on it, which is pretty good, but what it's really called is a kite. They're kiting money from one company to another because they all use component parts from each other. Their technologies depend on the chips. Well, you can do accounting tricks when you have that type of setup, which is basically what they're doing. Now, eventually the IRS will get involved and say, no, you can't do this, you can't do that, and they'll haggle that out for the next 3 or 4 years. But the bottom line is their valuations are what they're doing. Your stock valuation goes up based on its revenue stream. Doesn't really discuss what the expense factors are, and therein lies a bit of a problem. It's an accounting trick to boost the share value. Why? More than likely because the CEO is getting a percentage of the increase in the share value. There's your answer.
And here is another lady put out there on social media. Do you agree with this? Michael Burry is the investor who correctly called the housing crisis. The Big Short was about him. To explain why Burry is saying here, when the companies announce earnings, they do not announce revenues or profits. They also have to subtract the depreciation and amortization of their assets, meaning what they own that has lost value over the previous 3 months or year because it's old or outdated. Burry is saying that tech companies are making their earnings look bigger by refusing to subtract the depreciation of their assets correctly. For instance, the chips used in AI are good for about 2 years. Then inevitably they lose value because faster chips get invented. The way tech giants are accounting for their giant chip purchases, they're saying that those chips will last double or triple the time, 4 years or even 6 years, according to the chart below. This means that tech giants are subtracting less risk from aging chips to make it look like they're keeping more of their revenues over time. That misstates their financial position and misleads investors. It's a big allegation because these companies are spending billions of dollars on these chips. You think that's true?
Yes. Yep. It's an accounting trick. It's exactly what they're doing.
Is there anything that isn't an illusion? Is there anything that isn't based on not reality? I mean, that's the one thing we've believed for a while, but we've become more aggressive in my mindset that so much of what we look at is not reality. I'll close with this. You have a new article out you sent me. Let's see here. It's for the kids, dated 11/25. You'll find it on his website. Tell me about that, and then one more before we close.
That was a document I was referring to from the California Process Center. So what I did is I supplanted the word Texas for California. And that document from California, because I knew people wouldn't read 320 some odd pages. But here's the point. They created advertising and said, we're doing this for the kids. It's the same advertising, the same process, the same method that California has used for generations, in reality, all the way back to 2000. Texas followed it verbatim. Both states use what's called capital appreciation bonds or zero coupon bonds that now cannot be paid off. There's no math. You can't get blood out of a stone. The median household income doesn't exist. The property values are completely fake. This will blow. So I created that document because even the California Process Center itself used the word toxic. The capital appreciation bonds, in case of Texas, zero coupon bonds, are toxic. They can't be paid off. So that document outlines the processes that were used by California, which are the same processes in advertising, conning the people, lying to the people, that Texas has used and that California, for the most part, invented. And then one other thing, with regard to Michael Burry and his statement about, well, they're not using the appropriate depreciation schedules. Again, it's worse, because what else is not being done properly within those organizations, because they've got this kite of money going between them. So they push the values to make the stock market look like the stock market, NASDAQ in particular, is going up. So NASDAQ keeps hitting all-time highs, but for the pullback in the last 10 days, and it may go back up and touch it again before the whole thing blows to shreds. That's what the market does. It's called a double top. If it hits that double top, look out below. However, that's the stock market, NASDAQ market, the NASDAQ index, independent of the bonds that touch the lives of every property owner. The bonds are where the big money is. That's where the real problem is going to occur.
And then you had an article on not only is the equity in your home being stripped from you while you sleep, so are your constitutional rights. This should concern every property owner and every single citizen, because you're paying for it regardless of what state you live in. As goes California, New York, so goes Texas. As goes Texas, so goes the United States of America. That is also at your website too, mockingbirdproperties.com/DCAD. So as we wrap, let's give some action points. I don't give financial advice. I give financial opinion. I can't give financial advice for legal reasons. So there you go with that disclaimer. What do you think people should be doing, the average person watching tonight? How can they prepare, or what should they be doing to protect themselves, in your opinion?
One of the things that we've been hammering on is get educated. You don't have to believe us. You don't have to trust us. I wouldn't even want you to. I want you to go and study. You can go to my website. You can look at it. Learning what's happening is crucial. Whatever source you get it from, it's crucial. Sitting still and saying, well, woe is me, isn't going to work. You've got children. You owe it to your child, to your children. You owe it to your neighbors to get involved with your central appraisal district and find out what's going on with regard to the real estate taxes. We do what we can in life to achieve whatever it is that we're trying to achieve, right? If you're doing what you're doing for your child, you're going to work to get money to keep a roof over your head, keep food on the table. That's what you do. However, your children have a life, and the people that are teaching your children, the education system is failing. We just found out recently that in the case of Richardson, Texas, they passed a $1.5 billion bond, yet they've got admitted 9,000 student shrinking population in a system that, from an education standpoint, has failed. The Texas Education Agency themselves has taken over the school district in Fort Worth. So the Fort Worth ISD has now been taken over as of about a week ago due to failing grades. We have been successful, extraordinarily successful. It's never been done that we know of in the history of Texas, but we got involved in a Facebook account, and we were allowed to take that over, Travis did, through the administrative process of that Facebook account. And in a very short period of time, all the bonds that were requested by the school districts were denied. Explained it to mom and pop. So that's local. Well, if you can find a local Facebook account, a local Facebook group, where people are upset about these property taxes, you now have the nucleus to start destroying the school systems. You must get rid of these bonds. It's not an option. No school district in the United States should ever have access to the bond market again in history. They have blown this so badly, it can never be allowed to happen. That's where you have to get involved. Mom and pop cannot sit there anymore and say somebody else is going to pick up the ball. We have the proof of concept. We did it in a very short period of time. This was less than 60 days. We turned around what was going to be for the school district a slam dunk. We got the bonds. By the way, they spent $130,000. We spent nothing. I didn't write a 10-cent check, nothing. A handful of people. They simply got together and said, let us use your Facebook account. Give us administrative privileges. We'll take it from there. So we had one fella, ex-military, who looked at things from a legislative standpoint, which was great. And then we had Travis pushing the buttons and me in the background pushing Travis. So just a handful of people. We had a person her name is Kayla. She was a member of the school district board. And we got her on videotape. We've got video testimony that's already been handed off to the Washington Council. So a very short period of time, we destroyed their ability to raise bonds. They dropped 130 grand. We dropped zero. This is the power of mom and pop.
So you stopped them from being able to put out more what you would deem as fraudulent bonds. They can't keep doing this. You stopped them.
100%. Wow. Straight across the board. Everything in Johnson County went down to zero. They couldn't raise a bond. So it can be done, but it has to be done at a local level. It's like saying, well, the Texas legislature is going to do this for us. Well, it turns out, and that's the point that was being made by the ex-military person who's a member of the group. And he said, legislatively speaking, do you realize they can float every bill that they want, including the one that I wrote for Helen Kerwin? But the Speaker of the House has the ability to deny that bill from ever coming to the floor. So they can run around like chickens with their head cut off. We're going to do this bill, this bill, this bill. And by the way, there was over 6,000 bills created. They can't even read that amount of bills. Therefore, nothing happens in the Texas legislature. And I'm working on a document right now. Leslie's revealing it as we speak. But in that document, I'm going after Governor Abbott. He's going to win this upcoming election. And I'm admitting that. But here's the point. He put out something called, we're going to empower Texas taxpayers. And it was 6 bullet points. And I took every single one of those bullet points and called BS on every one of them, because not one of them is true, which means, Governor, you were the Attorney General in the year 2002. What have you done as the Attorney General? You keep saying we're going to eliminate the property tax. First of all, it's a half-baked statement. It isn't true. You have to replace it with something, which is the sales tax, which is in the bill that I wrote for Helen Kerwin. Second of all these other elements that he came up with simply are not true, which indicate you're doing the same thing. You're going to pass this buck down the road, at least in your mind, till the next governor shows up and it'll fall apart under his watch. The problem is, Governor, it's falling apart now. When you've got this amount of ramp up of evictions, this amount of ramp up of foreclosures, sorry, this is on your watch. The school districts, the vast majority of them that have access to the bond market, are bankrupt. And the Texas Bond Guarantee Program is insolvent. Governor, this is your legacy. That's the point.
Wow. Check it out. All of it, folks, right here. Mockingbirdproperties.com/DCAD. Mockingbirdproperties.com/DCAD. I was only intending to keep him 30 minutes, folks, but man, he is such a wealth of information. And this is coming fast, folks. And you can see all the signs. We've laid them out tonight. You better be earnest and you better be smart, because a lot of folks are going to get hurt. Do what you can. Get out of harm's way. The train is coming down the track. Again, mockingbirdproperties.com, DCAD. Mitch, thank you for all you're doing.
Thank you very much for your time. For those who are interested, go to my website. You can search the word articles, and that'll take you down to that section that he was just referring to. And that website is searchable. So if there's a keyword you're interested in, just type it in, and whatever we've got on the site will pop up.
Excellent. Do it, folks. Pass it around. Tweet, text, email, Facebook, get it, Truth Social, whatever you do. Spread this around. We got to wake up the American people. Wow. Thank you, Mitch. All right, guys.
Great. Thank you very much.
We'll be right back after this short break.
I'll tell you one little quick story. We had a Worldview Weekend client who lived in California, lost their house. Very wealthy guy. He didn't use Bitcoin. He came over here, drove to Arizona with $286,000 worth of his gold because he had no money and no house available. His bank was shut down because he couldn't have access to his bank account.
Was this during the fire? Was this during the fires?
During the fire. Didn't have his driver's license. He lost it. The state wouldn't give him a new license because he had no active mailing address. Real mess. So he came to Arizona to buy a house. He's moving everything over. He said, the only thing I got in my possession that I can get liquid with right now is my gold. I gave him a check for $286,000, and guess what? I didn't need his social, his driver's license. Sort of smiled, and I said, you know, I know you and Brandon talked about how this worked, but boy, this is great. I feel good. I got my money. Nobody bothered me, and I'm protected, and it's private. So you people out there who are sitting on your hands when Wes and I are sending you these requests and Brandon and you are talking to you, you better get active because you're going to pay me $4,000 an ounce the end of the year. Trust me.
You better get your. I highly suggest you get your free packet. You don't have to do anything. It's free, no obligation. Just simply go to worldviewgold.com, fill out the form, worldviewgold.com, or just text Wes and give him your name and address and say, I want the free packet. That's all you got to do. 602-558-8585, 602-558-8585.